Human emotions and their corresponding expression are rhythmical. This phenomenon occurs everywhere, be it in business, music, literature, or politics. It is very pronounced in the stock markets, where constantly changing price movements are the norm. R. N. Elliott said that stock market prices move in waves. Imagine a wave of water. It is made up of innumerable drops, which combine together and move in a particular direction. As more droplets join the wave, it picks up speed in the same direction. Between each wave, there is a period of inaction. As more waves are created, the body of water begins to move. Market behaves in the same manner. At one moment, everything is quiet and stands still. Then, some new information hits the market, and the participants are active, pushing prices in one direction. Wave. This wave picks up speed and moves till all participants have reacted to the news and the movement can no longer be sustained. This is followed by a period of inactivity till such a time new information hits the market, taking it in the direction of the earlier wave. Or, even without any new information, profit taking moves it in the opposite direction. This ebb and flow of market action represents the wave that R. N. Elliott discovered and systematized in his theory.